Coming up on Business Incorporated. It's day 2 at the Intra-Africa Trade Fair as exhibitors showcase products. Council of Palm Oil Producing Countries add new members. And Kenya postpones trade mission to Uganda on milk sugar standoff. Hello and welcome to the program. I'm Ladi Williams. First off, the markets right here. At intraday, market numbers were mostly negative on the African continent. The NGX index shaved off 0.7%, while Egypt declined 0.61%. Only the GSE in South Africa was positive. It went up by 0.71% at intraday. Kenya ended Monday's trading session negative, down by 0.37%. Meanwhile, sentiment in the Middle East were mostly positive at intraday, particularly in the United Arab Emirates. The Abu Dhabi index gained 0.5%, while Dubai's index rose by 0.52%. Elsewhere in the region, the Qatari index made a moderate gain of 0.12%, while the market in Saudi Arabia declined 0.42% at intraday. All right, now let's head over to UK, where today's GDP report shows that the UK economy is lagging. Well, let's bring in Juliana right now, right there in the UK. Great to have you, Juliana.
Hi, Laddie.
Yeah, okay, so I see that the markets are looking quite mixed today. How's it looking right now?
Well, the markets are in good shape, actually. We had the unemployment data this month showing that unemployment surprisingly dropped yet again in the month of October to, I believe, about 4.3%. During that month alone, 160,000 people gained employment. This has really shocked the markets because, of course, the furlough scheme ended at the end of September. The government for over a year were paying people to stay at home. There are about 1 million people still on the furlough scheme, relying on that government money. Lots of expectation that there would be several redundancies. That hasn't been the case, and because of that, the pound has gone up. Usually, when the pound goes up, the internationally focused FTSE all-share reduces, but that hasn't been the case. It's in positive territory at intraday. It's up 0.06%. The FTSE 100, that's also up by 0.02%, and the FTSE 250, the domestic market, that's down by 0.22%. In the currencies market, the British pound up, as I was saying, on the US dollar by nearly 1/4%. It's also up on the euro by 0.22% and up on the Japanese yen at intraday by 0.15%.
Yeah, I also saw that UK unemployment rate dipped by about 4.3%. What's driving this?
Well, as I was saying, Laddie, it really is the fact that the furlough scheme has shocked the markets. The ending of the furlough scheme has shocked the markets. 160,000 people were added to the payroll in the month of October alone. At the moment, there are currently 1.25 million vacancies. So anybody watching this broadcast in the UK, if you're looking for a job, you shouldn't really have to look far because there are so many vacancies available. Lots of this is to do with the fact that some recruiters are looking for specialized skills. They're finding it really difficult at the moment to get people into gainful employment. It's especially matching them to places where it's really, really scarce. This is really affecting the manufacturing and construction, even retailers. If you go up and down Oxford Street, just a stone's throw away from where we are at the moment, lots of retailers are looking for vacancies. They've got, the displays up in the window asking people to come in and get a job. But this obviously has serious implications. Yesterday, Andrew Bailey, the central bank governor, he was giving a testimony in front of the Treasury in the House of Commons, basically detailing whether or not we are going to start tapering back this economic stimulus that's been pumped into the economy to keep it going. Quantitative easing currently stands at about £895 billion. We know that interest rates are at a historic low of 0.1%, but the fact that people are still in work, people are still out buying, supply issues remain an issue. And because of this, inflation is going high. So potentially we could get a rise of interest rates during the month of December when the Monetary Policy Committee meet. If it does rise from 0.1%, this will be the first time that the Bank of England have done so in 3 years.
All right, we'll keep tracking that. But you were at the Africa Energy Forum yesterday. Can you give us a sense of what was discussed?
Yeah, I was. Channels Business Global were at the Africa Energy Forum yesterday. It's a 3-day event that's taking place in the capital. The last time the Energy Forum met in person was in Lisbon in 2019. But I think this event kind of dovetails perfectly from COP26. Lots of big names and big players were in attendance. Penny Mordaunt, who's the government trade minister, she gave one of the opening remarks. And really now it's about Africa taking centre stage and using energy to transition itself into a cleaner, a much greener space. We sat down with the newly appointed Her Majesty's Trade Commissioner for the continent, Alistair Long. He spoke greatly about some of the visions that the Trade Ministry have, especially post-Brexit with the continent. But of course, a lot of the usual rule books have been ripped up to try and get to the net zero target of zero-free emissions by 2050, which is difficult, but nevertheless something that all the countries are pledging to try and move towards. Some of the main topics that were discussed yesterday, again, is how do we get to this energy transition on the continent, the politics of not financing gas. I got a lot of gasps in the audience, I must say. Partnerships to help utilise becoming more efficient and building capacity on the grid for new projects. All of the details will be in Channels Business Global on Friday at 4:30. But it does go over a couple of days. So today there will be more speakers and it concludes tomorrow. Some of the big players from Nigeria that were there were the Niger Delta Power Holding Company and the CEO of Ikeja Electric.
Right. Well, it's all about energy transition right now. Anyway, Juliana will be looking out for that on Friday. Thank you so much for the update.
Thank you.
All right, moving on now to the U.S. U.S. stock futures were little change in trading today after the major averages started the week with muted moves as investors digested a jump in yields. Futures contracts tied to the Dow Jones Industrial Average gained just 3 points. S&P 500 futures and NASDAQ 100 futures both hovered in mildly positive territory. Well, let's get yesterday's trading report from our correspondent, Maria Bird, right there in the U.S.
The U.S. stock market started the day on an upswing, but ended a bit lower than expected. The S&P 500 was almost unchanged, only down by 0.5 points. And the NASDAQ was down less than 0.1%. And the Dow Jones was down 0.1% as well. It is clear that the inflation pressures are causing investors to be unsure as to what will be next and whether or not the U.S. stock market will be able to sustain the inflation.
All right, over to Asia now. Shares in Asia Pacific were mixed on Tuesday as investors reacted to a virtual meeting between U.S. President Joe Biden and Chinese President Xi Jinping. And Chinese stocks ended the trading day lower, with the Shanghai Composite falling 0.33% to 3,521 points, while the Shenzhen component fell 0.15% to 14,613 points. Japanese stocks closed higher, with the Nikkei 225 up 0.11% to 29,808 points, while the Topics Index climbed 0.11% to 2,050 points. In South Korea, the Kospi finished the trading day fractionally lower at 2,997 points. The S&P ASX 200 in Australia fell 0.67% to close at 7,420 points. And now to the oil markets. Now, oil prices slipped today as a rebound in COVID-19 cases in Europe raised concerns over demand amid expectation that supply would rise. They may release crude reserves to stop a rally in the gasoline prices. Brent futures fell 9 cents to about $81.96 a barrel, while U.S. West Texas intermediate crude slid 10 cents to $80.78 a barrel. Europe has again become the epicenter of the COVID-19 pandemic, prompting some governments to consider reimposing lockdowns, while China is battling the spread of its biggest outbreak caused by the Delta variant. All right, right now it's all about the IATF 2021 Intra-Africa Trade, and we have right there in South Africa, Brian Fugeni, right there at the event. To bring us up to speed. Great to have you, Brian.
Thank you for having me, Nadi. How are you?
I'm doing great, and you look great yourself. So it's day 2 at the event right now. With all that's been said by leaders at the fair, what do you think are the expectations for Trading Africa?
Well, we saw the opening ceremony yesterday, which was quite a success with 7 African leaders present. All of them speaking positively about what's going to happen. Expectations are very high for intra-African trade. The expectation is for African countries to have free trade. They've been talking about African free trade for a very long time. So it's still the talk, and everyone is really hopeful for that. And all the leaders saying that, the exhibitors are also expectant that they'll get deals through and talking through with different countries.
Any interesting products caught your eye over there?
Well, it's a mix of cultures. It's very good to see different cultures from West Africa, East Africa, North Africa, and Southern Africa itself. So it's quite interesting to see all these different products from different countries and seeing how other countries are also interested in seeing that. We've seen people from Zimbabwe, Zambia going to the West African stands where there's Ghana, your Cote d'Ivoire. So everyone just wants to see those products, taste those products, just those different cultures.
I can imagine. All right, Brian, we'll come back to you some other time for more updates. Do enjoy the fair.
Okay, thank you.
All right, so let's look at the metals market now. We see gold prices steady today after rallying to a 5-month peak in the previous session as concerns over broadening inflationary risk kept the bullion safe haven appeal intact in the face of stronger U.S. dollar and elevated bond yields. Spot gold was flat at $1,862 per ounce, as U.S. gold futures was also flat at about $1,866. Rate hikes tend to weigh on gold as higher interest rates raise the non-yielding metals opportunity cost. Spot silver was steady at $25.04 per ounce. Platinum fell 0.1% to $1,085, and palladium dropped 0.6% to $2,142. And after the break, commodities updates is next. That's in a moment. Do stay with us. All right, before the commodities update, let's go to Europe now, where European stocks were set for muted open as Tuesday's investors await key economic data and digest a slew of corporate earnings. Let's bring in Christy Platzen right there in Frankfurt. Great to have you, Christy. Well, the Dutch government said it was unpleasantly surprised to learn that oil and gas giant Royal Dutch Shell is moving its headquarters from the Netherlands to the UK. What does losing its biggest company mean for the country?
Yes, this is certainly a big blow for the Netherlands. Shell was really quite an iconic Dutch company, as you said, the largest company in the country. They had a turnover of over $180 billion in 2020. So by moving their tax center out of the Netherlands into the UK, this is going to be a major blow to the Dutch treasury, of course, so something that the government certainly is not happy about. And as a bit of background information, we should remember that last year something really similar already happened to the Netherlands. We had the consumer goods giant Unilever, who also had been previously a British company. They had been planning to become completely Dutch and then ultimately changed course and became completely British. So what we are seeing here is a major endorsement for the business climate in a post-Brexit UK. Of course, we've seen major gains for the Netherlands on a business level since Brexit occurred, but now we're also seeing major losses occurring as well.
All right, well, quite a big blow there. It's, well, let's look at cryptocurrencies that were falling heavily this morning. Can you tell us why?
Yeah, that's right. We saw the number one cryptocurrency, Bitcoin, falling 4% this morning. Number two currency, Ether, falling around 7%. And the overall global market capitalization for cryptocurrencies also down 7%. So clearly a pattern here, not a great day for crypto investors. And there are a few different factors at play in what's going on today. One expert that I spoke to, he said that it has to do actually with the U.S.'s new infrastructure bill, oddly enough. That was recently signed and has maybe caused a bit of a sell-off with investors fearing that there could be increased regulation around cryptocurrency. And indeed, this infrastructure bill does include new reporting requirements for taxation purposes for cryptocurrency holders. So that's one factor, of course. And then there's concern about a continued crackdown in China on cryptocurrency, on also the mining of cryptocurrency. We heard from China saying that they are planning to continue their crackdown and are now considering punitive fees for electricity for crypto miners that are currently only paying residential electricity fees. So this is also another blow, a lot weighing on this market today.
Yeah, that's a lot weighing on the crypto market. All right, thank you so much, Christy Platson, right there in Frankfurt. Thank you.
Thank you.
All right, moving on now to the commodities update. Today our focus is vegetable oil, household staple used for frying, baking, grilling, and cooking. It is essentially widely used across all regions of the country. However, the price of vegetable oil has surged recently. What's driving this? Well, we have Abimbola Adigun, analyst at Financial Derivatives Company. Great to have you, Abimbola.
Hi.
So
first of all,
Okay. Yeah, so we've seen the price surge from about 36,009 for a 25-liter gallon from 16,900 same time last year. And we got a report that inflation is down about 15.99%. How does this all fit in?
Okay, so first of all, I would like to say that the fact that inflation has reduced to 15.99% doesn't mean that prices have fallen. It simply means that the rate at which prices increase is slowing down. So over the years, vegetable oil has increased in prices, and it's not only vegetable oil. You can also see commodities like rice, beans, and so on, Gary as well. And this would be factors that affect these the increase in the price of these commodities would be the exchange rate pressures, the higher logistic costs, the insecurity of farmers, which has caused scarcity in supply of products. So I would say that with these factors that I've mentioned, they're still constant, but inflation only responds to the rate at which these prices increase.
All right, and we know, vegetable oil is supposedly high in cholesterol, which health fanatics and the weight-conscious believe is actually dangerous, today. But it doesn't seem this is having any impact on demand.
So vegetable oil is used in everything that we eat. So it's not consumed alone. When we're eating, we cook with vegetable oil. So this would always increase. This means that there will always be a demand for vegetable oil. Now, if you're looking at it from the aspect of health from the aspect of the health of consumers, there are different categories or different types of vegetable oil. We have canola oil, coconut oil, olive oil, and the likes. And these oils, they contain healthy and unhealthy fats. Trans fats and unsaturated fats are the unhealthy fats, while unsaturated fats are actually the healthy fats. So initially, producers of vegetable oil, let's say the unbranded oils, the way they preserve their oil is to convert this unsaturated fats, which are the healthy ones, to trans fats, which is where the problem lies, because it's affecting the health of consumers. Now, the country has made an enforcement that they have endorsed Nigerian Health Foundation and other relevant organizations to ensure or reinforce consumers' confidence in Nigerian-made oils. So now that's why we see in most of our branded vegetable oils, we see zero trans fats or zero cholesterol. So looking at fried meats, jollof rice, fried plantain, there's no how we would not use vegetable oil. The only issue now, what we need to concentrate on or pay attention to, is the quantity of oil that we use and the type of oil that we use.
Right. Anyway, Abimbola, you're making me quite hungry right now. But there are many oil mills in Nigeria dotted around the country. The inputs to making vegetable oil actually sourced locally. But why are producers blaming the price increase on exchange rates?
So there are some of the vegetable oils in Nigeria, some of them are imported. And then these are the ones that I would say that you can blame them on the exchange rates price, the exchange rate pressures, or let's just say the locally produced ones that you have to import its components, or the equipment that are used to process these vegetable oils, they're imported. Those ones we can say that they're affected by the exchange rates. But the locally produced ones, the only thing that I can say or I can attribute the increase in price of them would be the increase in raw materials. I'm going to use groundnuts, for example. So groundnut is grown and produced in the north. And because of the insecurities of the farmers, there's shortage. They're not producing as much groundnut as they should, which has caused shortage in the supply. And this is what has increased the price of groundnut oil. So this is what I'll factor into the price of groundnut oil as to why the locally produced ones are increased. But then we can also say that producers are increasing the price because the imported vegetable oils are high. So they would want, they're seeing it as an incentive that, okay, they can also increase their own prices. But looking forward, I think the way that we can solve this issue is to, for the imported vegetable oil, the government would have to tackle the exchange rate weakness. And then for the locally produced oil, the cost of doing business in Nigeria should be looked at or should be reduced. Like cost of fueling and all of that should be reduced. So yeah.
Right. Okay. All right, Abimbola, we'll keep tracking that price. Thank you so much for coming on the program, giving us that update. Abimbola Adigun is an analyst with Financial Derivatives Company. Thank you so much. Meanwhile, the Council of Palm Oil Producing Countries will add 4 new members, namely Colombia, Ghana, Honduras, and Papua New Guinea, to the bloc. The participation of these new members is believed will create a strategic alliance towards stabilizing palm oil prices next year and ensure a better international market share. Council of Palm Oil Producing Countries is an intergovernmental organization for palm oil producing countries. The council was established on the 21st of November 2015 by Indonesia and Malaysia, the world's biggest palm producers. And Kenya has postponed a trade mission to Uganda to resolve the sugar and milk import standoff until December, with jitters of whether the two countries are ready to find a lasting solution to the impasse. The visit is to verify claims that sugar and milk imported from landlocked neighboring countries originates from the third-party countries. Kenya and Uganda have in the past year been embroiled in a serious feud over several products, including sugar, milk and poultry products. And now the Democratic Republic of Congo's government has proposed government spending of 20.73 trillion Congolese francs. That's about $9.94 billion in 2022. That's a 41.8% increase over the year's budget. Minister told the parliament the increase would be made possible by strong economic growth, improved revenue collection, and higher donor funding. And that's it on Business Incorporated. Thank you for watching. I'm Ladi Williams. Bye for now.